Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So taking a look across the board here, folks, Monday we had somewhat of a flat to downtrending day. The Russell took the brunt of the selling for the most part of the day. And then something interesting, we'll take a look at the charts here, but we started to see some of the risk-off assets gain a slight bid. So gold and the bonds were kind of rallying throughout the day. So as always, we're going to start off our analysis with the S&P 500s on a daily chart. And here we are, folks, as we can tell here from the action, not a whole lot going on here. We're just kind of hanging out right below those 2300s on the S&P 5s. And as we take a look at the intraday charts here, I know we've been kind of mentioning that 2280 is sort of the inflection point. That represented sort of the breakout point from the last 6-7 weeks that we've been going sideways. Right now we are above it, but I'm sort of noticing this risk-off trade and kind of like just a little bit of a slowing of the momentum to the upside on the markets, equities markets. So here's just the places that I'm going to be watching for over the next few days. First spot here is the 2270s. Next spot is going to be the 2260s, and then the final spot here is the 2230s. And it's kind of interesting when you look at this and you kind of connect up all these lows, you can get somewhat of an ascending trend line here. So if somewhere down the road you start to break that ascending trend line, what's going to happen is you might start to hit some of these stops. And again, that's why these trend lines are very helpful in our analysis, is because we can see where those sell stops might be located down below and where we might start to see a shift in that trend. So folks, taking a look at this S&P 5s, again, right now it seems like it's doing okay. I mean, here we are, we're actually even forming a bit of like a cup and a handle here on the 60-minute chart. So if we break out up and over these 2300s, that's great. That'll be a nice thing for the S&P 5s. But again, just be aware of some of those places down below that you need to watch for. And again, predominantly the three I'm going to be looking for are the 2270s, 2260s, and the 2230s. Let's take a look at the Nasdaq here. And on the Nasdaq, we see somewhat of that relative strength we've been talking about. So Nasdaq still leading the way. And again, one of the things that I'm just watching here out of the corner of my eye is just how the bigger cap stocks are reporting and how they're behaving on their earnings report. So for example, like the Amazon, somewhat gapping down, and on Monday a continuation from that sell-off. Facebook, someone putting in a little bit of a reversal day up top, and then also taking a look at the Google as well, or Alphabet, right? Big engulfing bearish reversal day here and somewhat selling off. So just noticing just a little bit of weakness here in some of these bigger cap techs, which have been leading the way over the last 3 or 4 weeks. And so just one of the things we're cognizant of, and as we're starting to see somewhat of the momentum slowing, again, this is kind of why I'm starting to take a look at just where the support levels down below that we need to be aware of. Now on Monday, we didn't really have any significant breakouts here in terms of individual equities, but here's one of the things that I was noticing is that if we take a look at the gold here, and I'm just going to use the GLD as a proxy, we're having a little bit of a data feed issue with our normal data provider, but if you look at the GLD, we had a nice pop here. Okay, and if you remember, I was kind of talking about the 1220s. If you take a look at the actual physical spot gold contract, we were looking at the 1220 per troy ounce level, and that essentially is where we've been bouncing around. So this level here, that actually represented about the 1220 level on the gold contract, and we're mentioning how that represented a potential breakout area. If we broke out above the 1220s on the actual physical spot gold, then that would actually potentially set us up for a test of 1250. I think the gold actually closed the day up at about 1236. So folks, breaking out up and over that level and continuing that move higher. So again, we're starting to see a little bit of a bid coming into gold after we saw a pretty massive sell-off after the election, and we're just watching how buyers and sellers are operating and how they're creating that supply and demand, which is evident in the charts. So watch as the gold is catching a bid off these lows. Also, take a look at the 10-year bonds. Now I'm using the IEF, which is a bond ETF as a proxy, but we noticed that huge sell-off here right around the election time. We saw the bond selling off, which meant yields were going up, right? And what I'm actually starting to notice here now is the bonds are starting to perk up, and I'm watching here for potentially a trade above it was the 125 handle on the 10-year futures contract. And if you take a look at the 60-minute chart here, that trade above the 125 handle would put us right above here. So you can see all of today, right, a gap up and a trade higher on the 10-year bonds here, gap up, trade higher, while the S&Ps during this time frame somewhat, sideways to slightly down. We're seeing the bonds catch a bit of a bid. So again, just like an early heads up, we are seeing just a little bit of stalling or slowing of the momentum from the bigger cap names that have led us thus far. We are starting to see a little bit of a bid coming into the bonds, a little bit of a bid coming into the gold. Those are typically risk off type trades. So again, whether the market continues higher or whether we start to see additional signs of potential selling in the market, our game plan remains the same. Looking for the best relative strength stocks, breaking out of recognizable chart patterns with volume. And that's what we're always going to be tracking. Ladies and gentlemen, that remains the same. And hey, have a great trading day ahead and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about easy breakouts, go ahead and click that show more right above the comments section to find out more about easy breakouts. But other than that, have a great trading day ahead and may the trend be with you. Take care, everyone.